Welcome back to the Crypto Crush Show podcast. Today's episode, we are going to be talking about and covering one of the biggest market crashes that we have ever seen in liquidation terms in the crypto markets. And one of the best people to talk about this with is a very special guest that I have with you today. This is Joshua Jake. He's one of the biggest influencers in the cryptocurrency space. And he is also now dipping his toe into trading with his new company, FOMOed. Josh, welcome to the podcast.
Yeah, thank you for having me today. It's been quite the setup here coming out. The chat can't see, or the comment section can't see it, but it is hot today. Very hot today. We have the sun is inching closer and closer to us. So we might get a little sweaty this interview, but it's been sweaty, I'd say, to say the least, with the market crash over the weekend. So it kind of fits the narrative of the panic right now.
It does. The meltdown is real.
Yeah.
The meltdown is real.
Yeah, we're melting down in real time. Yeah.
Literally. But before we jump into the market crash, for those that don't know you, do you want to give a little quick intro of who you are, how you got into the crypto space, and what you're getting up to today?
Yeah, so my name is Joshua Jake. Across all social platforms, I've built an audience of roughly 1 million followers just directly on crypto and politics. I started in the United States back with esports in 2018, dipping my toes in the crypto in 2018, 2019, putting all my stimulus money from the nice United States government into XRP and a few altcoins as well, which completely changed my life back in 2020, where I went full-time into content creation. And that just became a narrative of doing white papers and talking about crypto, educating myself and learning more and more about this new evolving space that, you know, fortunately enough, we caught very early on. Over those 4 years on content, I scaled my brand, of course, from about 10,000 to about 1 million followers, and started helping on the political side as well. So not only was I doing consulting and marketing and trading, I was working with presidential campaigns. For example, Ron DeSantis. I helped in a few different discussions and conversations through the FBBA start just focusing on, like, what does Bitcoin legislation look like? What does regulation in the US look like? How are we going to attain DeFi? How do we make sure retail doesn't get cooked by JP Morgan and BlackRock and these institutions and just stepped on with legislation? And so I ended up joining a North American Blockchain Association out there, where I spoke in front of multiple different committees and helped push through the Bitcoin Strategic Reserve. I got to meet people like Vivek Ramaswamy, Senator Blackburn, a lot of different senators and key individuals in the Bitcoin side. And that kept rolling. And then we just kept doing more educational content. And today, I just launched a few weeks ago the World Trading Esports Organization through FOMOed US, which is now a global event organization enterprise where we're going across the globe to find the best traders to compete live on stage, just like you've seen with Call of Duty, Fortnite, and all these other platforms, and have the world's best traders that tell you to buy their courses to come compete in real time on stage and see if they can compete for $1 million prizes. And that's going absolutely amazing. We just held our first event in Formula One, Singapore Token 2049.
Yes, yeah, we'll definitely cover that in more detail about what you're doing, because I think it's really innovative. I came from an esports background myself, being a gamer, so I totally understand what you guys are trying to do with the trading side of things, but we'll definitely jump into that a little bit more. But we've known each other for a while, maybe 3 or 4 years. We were kind of one of the only TikTokers in the space back then. And what I really loved about your content was it was so raw and honest. It wasn't about, any FOMO or hype. You keep things, very truthful and honest around what's going on in the crypto space, and very topical and news related as well, which is what I really like about it. And also from your political side as well, and macroeconomic side, I love that. So I would love to get your perspective on the crypto crash that has just happened, especially now that you're getting into the trading side as well, because one of the main things that happened was the huge $19+ billion of liquidations that just happened. So I would love to get your perspective on how you view the last couple of days, and was this caused by Trump? Is it manipulation? And how are the traders doing right now?
Yeah, I think traders are going to be feeling every type of emotion here. I call it the Trump effect. I have a famous video that went viral that Elon Musk posted. Did about 1 billion views of the Trump effect, and it was Trump's first day in his office, and everything had been happening on a global scale. This was back with India, Pakistan, you have Serbia. There's a lot of different wars that were going on, and it's kind of one thing after another. It was really positive at the time. Fast forward 6 months now, where we're at in the current state of the market, Trump has completely 180 the entire financial market in the United States. We went from a data-driven economy to now, what is Trump going to tweet out on Truth Social?
Yeah.
And so there's a lot of conversation out there right now with, was this market manipulation? Was this an insider? Was this winter mute? Was this, bigger players controlling behind the scenes, exploiting liquidity bridges? And I think the answer is simply, it's going to be all of the above. Trump 100% has an effect on the markets. And if you don't believe there's no effect on the market as an audience, just go look at his tweets and the market reaction before and after. The two most important people, if you're listening to anybody in the economy, it's not the Jim Cramers, it's not the, it's not the JP Morgan, Jamie Dimons, it's not Larry Fink, it's Jerome Powell and Donald Trump. And anytime those two people open their mouths, usually markets are going to react. So what we saw over this weekend here was a very interesting, very saddening, very angry, I was angry because luckily as somebody who teaches, my big thing is 50, 25, 25. And that's spot positions, that's investments. 50% in Bitcoin, 25% in large caps, 25% in small caps. And if you're making any money in your small caps, I think everybody needs to understand the crypto market, besides Bitcoin, is like penny stocks. It's you're betting on startups the majority of the time. And I think that's beautiful. I think it's an amazing opportunity for retail to have access to. But if you forget about the core idea of crypto, which is protecting your wealth, hedging yourself against inflation, the United States dollar, government debt, et cetera, and not storing that value in Bitcoin, you're going to end up seeing very terrible events like we saw over the weekend, which in this case, over the last 2 years, we've started seeing so much leverage come to the market. Every single company, I've been working with Middle Eastern, I've been all across the globe with these exchanges, trying to bring them to the US, working in regulation. How do I get these exchanges based in Abu Dhabi or the Middle East or Singapore, the US, wherever it is, how do I get them back to the US? And what we've seen is the companies, Robinhood, Coinbase, Crypto.com, Kraken, Gemini, they're all lobbying against retail right now. And they come out as they're for retail, that they're for the protection of the user. But in all cases, they're doing what's best for their company. They have a fiduciary responsibility to do what's best for their shareholder. And in this case, it's making sure that they control market share. And so what we've started seeing over the last few years is this pivot towards, as a fiduciary, as a shareholder, you have to do what's best for your company, which in a capitalistic society means you have to do what's the most amount of revenue. In this case, it's perpetual contracts, it's leverage trading, it's options, it's calls, et cetera. And so now Coinbase is offering it. Every exchange is offering it. I don't think there's anything wrong with it at all. I think perpetuals are amazing. But you have to remember the risks that come with that. And I think that risk was forgotten over the last 2 years. And that's what led us to now a point where Donald Trump tweeted something nobody was expecting, a 55% increase on tariffs to China. That caused a negative market reaction. A market maker, I'm sure, took advantage of liquidity pools through Binance. That caused liquidation in a cascade. And then you get that cascaded event. And that wiped out all the positions.
Do you think there's a bigger reason behind this? Because we've had multiple crashes like this before caused by Trump, for example, the tariff crash that we had in February and March. But even then, that was a couple $1 billion in comparison to now, which is 19 billion, which according to a lot of stuff on Twitter and Binance are actually covering up the amount of liquidations that they actually had. Was there something else that could have caused such a massive crash? Because we've been in the market for years now. I've been in it for 7 years. I've never seen a crash like this with 1 wick down of 50, 60%. Super, super unprecedented.
Yeah, definitely unprecedented. Hopefully it doesn't happen again. But now people understand that risk, and I think yes, but I think it's a much deeper conversation. There's so much nuance to it, right? Because in one hand, people are going to blame Trump. That's okay. But Trump doesn't manage A book, B book liquidity pools. It has nothing to do with that. And so it's really nice to see Binance coming out and stepping up and saying, hey, we're going to recover a lot of the people that lost funds on their account. But the problem is they're one exchange out of thousands. And thousands of those exchanges may not even be coming back online, let alone paying back their users. And so I think it's a little bit of I think it's market structure. I think it's negligence on the regulatory side, because for years and years and years, our governments have failed you. If you want to blame anyone, I'd blame the government. I'd blame the slow adoption. They want to push out all of the liquidity. I'd really blame the United States in a lot of cases for the slow approach to regulation. Because these are things that the congressional members should have been working with their districts and these exchanges to prevent. You should not be able to liquidate a 90% margin on an altcoin on a 2 to 3x leverage position. Again, you can. Money has karma. Andrew Tate says this all the time, and not to quote Andrew Tate out of all people, but he says a lot of real stuff sometimes, and it's money's karma. Money is like, the amount of money you have is literally going to decide at a certain point what's going to happen to your portfolio and your risk. So if you're somebody that's coming into crypto and you just want to get rich quick with $5,000 and you're on a 30, 40, 50x leverage, he's 100% correct in the sense like, expect to get liquidated, right?
Yeah.
Nobody gets rich quick, and that's not investing. That's gambling, right? No stop loss on a 50x position, and you're putting your life savings into that. You're gonna get liquidated, and so I think it's just a balance, and this is what people need to realize, especially when they advocate for a decentralized economy, is within that decentralization comes a balanced structure of power. More money is gonna be able to have more control and say what happens in that decentralized world, in that decentralized economy. And if we don't have any good actors in this economy that are coming in and saying, hey, we see all this money pouring in, we need to protect the user, we need to protect the liquidity pools, we need, regulation that pays back these investors, at the end of the day, the liquidity is going to continuously take advantage of retail, and retail's always going to lose. And so I think back to the original question that everyone has with, was this market manipulation, was it deeper? Yes, it's definitely and always will get deeper. But at the same time, you have to understand that this market's growing and it's not going to stop growing. And we saw, yes, a $19 billion crash, but it completely recovered in 24 hours, give or take. There's still a lot of hurt out there, but it's almost completely rebounded. Yeah. And I think that institutional interest is what retail needs to start saying. And I keep saying this to everybody. Retail needs to stop thinking as if they're retail. They need to start thinking as if they're a player, because this is an institutional game. It's only going to see more institutional money and inflow. Yeah. And if you keep thinking like, oh, I'm the 99%, I'm going to continuously get wrecked, and you don't play like the institution. Yeah. You're going to continue to lose.
Yeah. No, I totally agree. And talking about institutions, do you think that there's going to be more of a push towards the ETF products now that, we actually have a few ETF products hopefully being approved this week? Solana's coming up on the 15th. Do you think now, because of this liquidation, because of all these traders that have been liquidated, there's going to be a kind of shift in mentality, kind of similar to the meme coin situation and the blow off top that we had in March, where we've kind of seen people rotate from meme coins more into spot? Do you think that that's going to be a similar scenario where traders who were leveraged, even low leverage, they were in 2-3x, are going to more rotate back into spot, and people that want to be even more conservative will rotate into ETF products as well?
Yeah, so it's a great question. I think there's two parts to this. I think institutions will 1,000% focus on more ETFs. And so I think there's two things everybody should be doing right now. Number one, study all the altcoins that are either back at all-time highs or weren't affected by this liquidity drop. Yeah. There's quite a few out there. BNB, there's some small caps, I won't show them, but they weren't even affected. Yeah. And so BNB, I think, if you're getting into crypto, study BNB's tokenomics, because whatever they're doing from an exchange perspective, whether they're selling off Bitcoin to pump, whatever they're doing something right from the revenue aspect. Yeah. And institutions are going to like that. The ETFs, why they're so important, is because ETFs remove all the risk for these venture capitals and institutions. And that was we're dropping too much alpha, I guess, maybe that before we say that. So the institutions are going to 100% go into ETFs because there's no risk. The reason why they go into exchange traded products is because they aren't leverage trading. There is zero capital risk on the exchange traded fund side. And so institutional inflows are going to keep pushing into that. And I think this is, and I'm sure you've seen this, all the traders out there on Twitter go, ETFs are at all-time highs. This is more bullish than ever. Yeah. It's more bullish than ever for institutional products, not altcoins. Completely separate category. Yeah. And so to follow up that question to number two, which is, do you think retail are going to start being more conservative, ultra-conservative, and focusing on ETFs and more limited risk products? My answer to that is, I think no. I think we're in a late-stage capitalistic market, especially within the US with the debt that we've accrued. And what this means is it's positioned us into a stagflated economy. So you have a market right now in the United States where unemployment is struggling and inflation is starting to tick back up and starting to rise. We haven't seen this since the 1970s. And what this is causing us to do is we now have a point in the market where the Federal Reserves have to cut interest rates, which is going to cause inflation more likely to continue to persist. And the everyday American, and the reason why I'm using American as an analogy, I know you're from the UK and Bali based, you might be a more global audience. The entire financial system and structure relies on the United States data. Always has, always will, as it's the world reserve currency. And so it's so important from a macro perspective to understand your interest rates and your employment data coming out of the US economy. And what you're going to start seeing is In the United States, it is super sad, but in the United States, credit card debt is at an all-time high. US small business debt is an all-time high. Mortgages are unaffordable, right? They're trying to do all these different things just to keep retail afloat. And what's happening is the 99% is becoming the 99.9, and the 1% is becoming the 0.01. And it's creating this much larger wealth gap. And in that right there is due to late stage capitalism. I think what's going to happen is there's actually going to be a larger need, a larger want for getting rich quick, for taking your $1,000, your $300, your $500 and trying to get 20, 30, 40, 50x off of it. Because of this mentality of what's $1,000 going to do for me? It doesn't even pay a third of my rent.
Yeah.
So I'm going to put that into something that's a lot more risky. And so unfortunately, I think it's a balance. I think institutions are going to continue to win. And I think retail that keeps thinking from the retail perspective of I got to get rich quick are going to continue to lose more and more money.
Yeah.
And the market's going to continue to grow.
I think you're kind of right on that point, because I think currently where we're at, especially, I mean, I'm Gen Z, from my point of view, and the reason I got into crypto in the first place was I recognized the fact that it's not like 40 years ago. I can't go and buy a house. I can't get a mortgage. I can't, make a lot of money quickly. So one of the things that I looked at was what would be the tool and the asset and the resource that could provide me that. And that was crypto. So I get it from a retail mentality of being like, I actually don't have a lot of options. So my only option is to get into crypto and try and get rich quick. Although that bit me in the arse, and 7 years later, now I'm successful, and it took a long time. But yeah, I totally get it from that perspective. And I do see what you're saying with the institutions will continue to win, because at the end of the day, they're going to want to have a higher percentage and own as much Bitcoin or as much of this asset as possible, because they play the long-term game, as in retail don't. They play the short-term game, which is why, for example, retail gets liquidated in the end, which is crazy. But so switching gears a little bit here from the market crash, I wanted to jump into the trading aspect and something that you guys are doing, which is super interesting and something very innovative and new, is you guys are putting two things together, which is trading and live streaming all in one, and kind of creating this new form of esports. So talk to me about that and what the reasoning is behind it, and the kind of the genius behind coming up with something like that.
Yeah, so there's a lot of moving parts that kind of came into the vision here. Of course, I have a background. I tried competing professionally for Fortnite, Call of Duty, went to Las Vegas, competed at HyperX Arena. And every, I think, 18 to 19-year-old, once they leave the house, you know, like you said, you're even a part. Everybody kind of wants to be a streamer, a gamer. It's fun, right? It's energetic, and it's a very specific type of individual. Usually, it's an entrepreneur, but you kind of fall into that category. And so, I mean, just from the 18-year-old, you know, late teenage, early 20s, like it's just a passion of mine to play video games and have this gamified experience. Where the trading esports came into this was, and we just actually held the first ever live World Trading Esports. It's never been done live at an event. There was one in South Korea, but ours was actually live broadcast. We had full production grade studios and everything developed, broadcasting to all of our shows. And that is where we're now scaling with all these brands globally. The next one will be in Lisbon here in about a month. But the reason why we want to do it is two reasons. Number one is I wanted to gamify trading. As a trader, I've done multiple challenges, whether it's 1 to 10,000, 1 to 100,000. I've done $75,000 live trades on stream, bought a brand new Tesla, done the whole nine. And it's the biggest adrenaline rush you ever get. And anybody out there that thinks trading's bad and it's like, you know, you shouldn't do it, it's just like, you're not a gamer. Like there's an intense amount of strategy that goes into it. I also love Texas Hold'em. I love playing poker. And there's a lot of strategy to that. It's not a slot machine. It's not playing craps. It's not roulette. There's strategy involved with it. There's, just like in the institutional game of trading and poker, it's, you know, the same poker players, they know all the same poker players. And so they know when to sit out at a table, because they see that table's filled with 8 drunks that are, you know, putting 2-5, they're playing 2-5 and there's $500 pots, and they're going to take advantage of, it's an 80% probability they're going to walk away from that table with a lot more money. And in trading, it's the same thing. It's probabilities. It's using indications, retail emotions. It's a large gamified economy, and nobody even realizes that. And so the idea was to take the adrenaline all these traders are doing behind their PCs. All these traders already go to conferences. They're at these conferences. They travel worldwide to Token 2049, to Bitcoin Nashville, wherever they're at for these Bitcoin magazines. And these events, they spend millions and millions and millions of dollars, these organizers and partners. And there's almost no ROI. They're just pretty much throwing giant parties. And in my opinion, I'm bored of events. Events are so boring. How many times do you need to go watch Eric Trump say, Bitcoin's going to go to the moon? You know, like we really can't get bigger. The president of the United States said Bitcoin is going to like go through the roof. And like now it's just kind of this circle argument and conversation of the same people saying the same thing over and over again. What's not the same thing is the market at every given moment. Every single day you wake up in a new market in crypto, 365, 24/7, and traders across the globe, millions and millions and millions of traders are doing this every single day.
Yeah.
So the thought process was, why don't I take a small part of this budget from these large event organizers? I remove the boringness from the, shills and networking and like, man, what can you do for me there? And just give back to the viewer, give back to the audience member, and do a competitive live stream. And so in Singapore, we just held the first one.
Yeah.
We started out, we were expecting to invite 800 people, maybe 200 people showed up. We sent out the first 800 invites. We were a 20-minute villa away from the F1 track and the actual event. The 800 invites turned into over 5,000 invites, and we maxed out with an umbrella that's now in a swimming pool. And Mary Poppins just jumped off the balcony. You guys can't see behind the screens. We'll get that in just a second, and I'll continue the conversation because I think we need that lighting. So yeah, we ended up having over 5,000 people get invited. It kind of went viral in time span of 72 hours. We put this on in 72 hours because we saw what happened in South Korea. We're like, I'm building an esports application. FOMOed's got a whole platform. We're integrating live stream, DEXs, centralized exchanges, every single product you can possibly think of as a trader. And we're going to build a paper trading product. Yeah. And so the reason for that is across the globe, there is no ease of use application to paper trading. Some people are going to be like, trading view, some of these other, there is such advanced systems. I want something that is pretty much up or down, learn how to paper trade. And the reason why I want that is I think if people start actually using a ranked base product where they actually are dedicated, just like you do in Clash of Clans or any of these video games, Fortnite, Call of Duty, League of Legends, you're addicted to leveling up in your rank.
Yeah.
Everybody's addicted to their kill-death ratio. You're actually addicted to your stats, right? And if you have bad stats, it's embarrassing. And so that same ideology is where I told you at the beginning of this interview, or the audience at the beginning of this interview, we need to start having retail, stop thinking like retail and start thinking like a player.
Yeah.
I want them to think of their P&L like their KD, right? I want them to actually look at analytics and market research like they're going to better themselves as a player.
Yeah.
And that's the point of the paper trading. So the paper trading, what we're going to end up doing here is actually creating, just like you see with Fortnite, the FNCS and all these things, is paper traders can compete in monthly giveaways and sponsorships and world prizes. Yeah. And Fortnite, you have the World Cup, you have FNCS every month or 2 months where you can compete for a real as a player. You can play, and if you're the best in the world, you win literally like thousands, if not millions of dollars.
Yeah.
Same thing with paper trading. Now, the live part of this is it's just fun. It's just going with the event organizers to say, hey, let me reduce your guys' budgets immensely. I am by far the best MC that can do a sports competition. I've seen some competitors try doing stuff on live streams. They can't do what our production team can do. And it's now taking what they were doing on stage before and just adding a fun esport element to it.
Yeah.
And that is going to generate ROI. I want to create teams, every exchange, whether it's Binance, Kraken, Coinbase, Bybit, Order, like all these DEXs, Apex, all of them, you know all the platforms. I want every single one to have their own esports team.
Yeah.
And so every single one, if they have a good player, they have a good, position, a good team, they're going to compete well on a global stage. And that's going to do millions and millions of impressions. Where before, you just go to this event, they're hoping they get 100,000 views on Twitter. They're hoping people post the fire thing that they light on fire that costed them $50,000.
That's so true. I've never thought about it like that. Every single exchange having their own esports team, because we know that every single exchange, they will sponsor the F1, right? Different sports. Yeah. But no one's thought about actually creating the sport inside of the product, which is the trading, which is what they already have, which is really interesting. And I think that that's going to be huge over the next 5 to 10 years, because I remember when esports started to become a thing about 10 years ago, and I was supporting the team that I supported back in the day, which was FaZe Clan, when they created their first esports team, and I loved it. I would watch all the live streams, and I would watch them play Call of Duty, and you kind of get hooked on becoming a fan of this team of gaming, which was brand new and was never a thing 10 years ago. So I think hopefully over time, and you guys will probably be the ones to pioneer this, which is really cool that I get to interview you now before it kind of becomes a thing. I'll come back to this interview in 10 years and be like, I remember when we were talking about this. This is the start of trading esports, I think.
Exactly. And I think it's not only the start of that, I think it's the start of a new revolution of content creators and traders. I think over the years, I know you know this as someone that's managed KOL agencies with me, we've seen content creators that act and pretend as like these pretentious traders, that they're like the prestigious, I trade with $1 million budgets and I'm making all this money, and you find out that it's fake. A lot of it's fake. A lot of it's rented cars. A lot of it's like they're not actually trading. They have somebody trading for them.
Yeah.
And so I think what this is actually going to transition to is at first, obviously, it's going to be the OGs. It's going to be the content creators that we know. A lot of these there's a lot of great traders, by the way, that we personally know that will also compete. But what I think it's going to turn into, and what I'm excited for, is we're going to start finding quants. We're going to start finding institutional traders that are some of the best traders in the world, be able to come compete on a main stage and just all to become overnight, become a celebrity. Because they make let's say they're trading with a $100,000 margin, they make $50,000 live in front of everybody for an exchange. And then what happens is now, because of the reduction in risk, we can start doing copy trading. And so what happens is, instead of having your BlackRocks, your Vanguard, your Fidelities, your TD Ameritrade, your Robinhoods, right? All of these institutional investors that have institutional portfolios for you that they manage, that they're taking a fee of, that they're taking, payments and management fees of out of your pocket, your dime. It's going to become the world's best players that live on stage showed you not only that they can compete on a global scale, that they have really incredible risk margins. And so that is where exchanges are going to come in with the players. We're going to have, just like Ferrari has their best racers, just like, Mercedes, et cetera, through F1, it's going to be the same thing. And these traders who I guarantee you have 50 followers on X that nobody knows about today are going to end up having hundreds of thousands or millions of followers on X because they're actually the best institutional traders on the planet, and we're giving them access to retail. And I think that is a whole new player economy that hasn't been explored. And we have a lot of really cool tokenization ideas, and we're integrating Hyperliquid right now that should be out next week. We're doing a lot of things to make that possible.
That's so cool. Yeah. I really love that. I think you're right with the quant situation, because some of the best traders that we know don't even have social media. Like at all. They're like, I don't use it. I don't want to use it. I'm locked in. All I do every day is just sit there and trade. And then now these guys are going to have the opportunity to come on a global stage. Yeah,
and it's even like for myself, like, I trade all the time. I've done a lot of challenges, but I'm no means the world's best trader. I'm not even, in my opinion, I'm a decent trader, and I do it for a hobby. And I have really good trading friends that are insane, that have no social media, that are trading with $1 million, $2 million margins at a given time on 1 to 2x, 1.5, 3x leverage, and they're crushing it, right? And it's, so it's very humbling to be able to see that in person. And I understand, I'm not here to, act as the world's best trader, or, be someone that says like, oh no, this is like content creators are to be the best traders. I want audience participation. That's why we're building the game. I want people to be on our paper trading platform, leveling up. And let's say we have 100 positions in a world stage competition in the future, 50 of them go to the top traders that are competing on our platform. And so you're giving these traders that have no audience, entire platform, where it turns into either A, they're a celebrity, B, they get hired by the Fidelities, these quants, these institutions. And then the audience, again, it's all about the user. I want the audience. You are able to watch live, them analyze. I'm interviewing them. I'm pulling up their charts. We're watching them trade live. So the educational aspect of that is saying, okay, this is a trader that is anonymous on Twitter. He's just like me. He's an everyday person, but he's making millions of dollars trading. And here is the exact method he did. And so there's a lot of education behind that.
So with the live streams that you guys are doing, what's the structure of that? Like, how long have they got to trade? Like, what's the situation with that? What can they trade? Is it leverage? Is it perps, futures? Like, how does that work? Or does it change each time?
Great question. Yeah. So right now we're keeping it limited. This next event's going to be 20 traders. We're about 10xing the prize pool, but it's 5 rounds. So every single round, there's 4 rounds. The winner of each round get to move on to the final. So there's going to be 5 rounds in total. You have 45-minute windows to trade on 50x leverage perpetuals. And you get to trade on a $10,000 margin that's on a demo account. So it's fake money for a real prize, right? Because it depends on the jurisdiction. Some jurisdictions will be real money, real margins. but this is going to evolve over time. So eventually I want a multi-day competition where at Token 2049, we're pinning for this for Dubai this next year. It's going to be a 2-day competition, 8-hour times, divvied up into about 5 different brackets. And we bring in traders to trade on massive margins that are sitting there on stage, just going back and forth trading live. So we'll have like a low risk, high margin trading account. We'll do perpetuals. But I think this can even extend into meme coin traders. It can extend into tokenization equity markets. Like there's a lot of different games that we can actually create out of the esports structure. But the main panel is the fun part. And we have to integrate that degeneracy, which is the up to 50x. And that's the beauty thing. Is like if the exchange offers up to 50x, you can use 50x.
Yeah.
But a player that has better risk management and is only using 3 to 5x might beat you because it's lower fees. You're not charging as much on your fees. You're taking less risk. So, for example, the winner of our last competition, a lot of them were up $100, $200, $300 at one point in the competition. By the end of the competition, it was head to head. Like they were all like up $100, up $200, and you start seeing the emotions kick in. This is why we do rounds. Because in the last 5 minutes, you start seeing them go from 5, 10, 15x, max 50x, because they're trying to win the competition. So even the emotions kick in real time, and that's where the excitement comes from. And you start seeing, I watch people get liquidated, and they're like, oh my goodness, I was in second place. I could have won the money.
Okay.
It's, so it gets intense. But you guys will see, we'll announce very, very shortly here. We almost have the entire design for the new venue. I think we've actually locked in the new venue, but I don't want to confirm it here just yet, just in case it hasn't gone through. But it is the nicest venue in Lisbon. And we're doing this in a way with event production that no one else can compete with. Our head of production here has done production for Clash of Clans, Love Island. You have like the Eurovision, all that type. Yeah, a lot of big productions. So we're taking very fun venues, making it beautiful, making it the most entertaining experience anybody will ever have. And of course, you have the live trading esports competition being hosted at the same time. So
that's so cool. Do you think as well it'll, because like with esports, you have different games. So you've got, there'll be particular esports teams for Fortnite and then for Call of Duty. Do you reckon it's going to get to a point where it becomes, okay, you've got a particular team for just liquid, like leverage crypto, and then you might have, or like normal altcoins, and then you might have one for meme coins, and then you might have one for tokenization of real world assets? Like, do you think it will be split up like that?
Yeah, I think that's exactly what's going to happen. I think what's going to eventually happen is, so the concept's constantly going to evolve. I think we're always going to do the 1 to 50x leverage, maybe even up to 100x leverage, because that's fun, right? It's demo money, it's not real money, it's competition for a real prize, right? So it's also like you're actually learning, because these are people trading with massive margins, and you get to see how they analyze and win a huge prize pool. But I think what this will also turn into is we're going to have some massive institutional players where they're hiring their institutional quants on $1 million, $2 million, $3 million margins, and they want them on a main stage. Because imagine if Fidelity's winning every single world stage competition, and now their entire outlet is 20 million views per live stream going straight to Fidelity's account because they want to copy their institutional trades and portfolio positions. And so I think you're going to see anything from $1 million to $5 million margins. We might get to, I don't think we'll go really past that, because I want this to still be kind of like retail can kind of feel like they can touch it. And I want, again, retail to start pivoting to the conversation of they understand that they're a player and anybody can play in this. And that's the opportunity we're giving. Esports is for everybody. We say esports, it's in the trade, which has kind of got a nice little nostalgic kick to it. So yeah, I think that's the idea here, is we want to onboard the next 10 million traders. And we want to onboard the next million traders in a way that they're being educated and they're consistently trying to compete in an open market that they know they can take advantage of. And that will be through esports.
I love it. I love it. It's so innovative. It's so different. And I think it's just an awesome new way to onboard traders and also bring cryptocurrency to light and onboard new people to crypto as well. Yeah,
I want to say one thing on it too that's made me learn is building this company. I mean, you've seen the employees we have now, the structure, the products. Something that's beautiful about it too that we're going to educate our users on, and hopefully you'll be in a lot of these interviews with us in the future too, and come to these events, maybe even compete. But ultimately is understanding the value of tokenomics now. We have no token. And we're producing revenue, creating these events, these organizations. I'm working with the products that have tokens to run events. And we're starting to learn a lot of the truth of the industry as well. So we're getting a lot of insight on how these products run, how they operate. I think we're moving towards a world where it actually matters about revenue. There was this constant phrase of decentralization, you're a hedge against the government, get into Bitcoin.
Yeah.
But I use this term a lot, or this phrase a lot. Decentralization is a myth, it's a masquerade. And the reason why I say that is because in a capitalistic society across the globe, you can't have a decentralized market where more money has more power and more control.
Yeah.
Back to that original part of our conversation. And understanding this makes you realize that, okay, if the government and capitalism is in this market, which obviously it is, that's what created it, it's what spawned it, you need to understand that revenue matters. And so when you guys are, just any audience member that's tuning in, if you want to know after this market crash what you should be paying attention to, pay attention to the products that not only rebounded and survived it, pay attention to the products that have real revenue.
Yeah.
Because I'm in the discussions with those circles on their future outcomes, their investments, their plans, their exposure, their growth.
Yeah.
And it's much different than the products that are bootstrapping and selling their tokens off to survive.
Yeah, I agree with that. And a couple that brings to mind, and one that you mentioned, B&B, Hyperliquid as well. Their tokenomics is really good. And I think I've noticed that over the last year specifically about the projects that tend to do like really well are the ones that have a particular type of tokenomic system, kind of like the Hyperliquid system, the B&B system. So do you think that over the next 5 to 10 years, it's going to be more important to focus on products and companies that generate revenue rather than just, because with tech, we know that there's a lot of tech products that go 10 to 20 years without generating any revenue. And that's why cryptocurrency is such a speculative market, because it's like, oh, well, it doesn't matter if it's not generating revenue. We've put that in the kind of tech bucket, you could say. But are you saying that actually we should be focused on revenue and the blockchains and the products and the services that are generating revenue? Yeah,
I'm saying product matters completely. The perfect example is Pengu, like Pudgy Penguins. Like they were a meme coin, it started producing revenue. And now they're in TV shows on Apple. Like they are so big. They rang the bell for the NASDAQ for, I think, Vanik. They are so globally big as a brand now. And it's because of their product and merchandising. And so I think that's going to flow over. Same thing with B&B. B&B's got tons of products. They got their exchange, they have their chain, they have launch pads, they have market makers, they have all these different revenue sources that allow them to buy the dip, buy back their token, burn back their supply, invest in a Bitcoin, turn that into tokenized liquidity pools, earn more money off yield, and allows this constant flow of growth for the ecosystem. And so I think, you're definitely going to be seeing, I still think you're going to see the memes pop off, right? Because we talked about the degeneracy a little bit. I think because of that, you're going to have people constantly gambling. But I think, moving forward, 50, 25, 25, that's what I fundamentally, I believe that to my core. It's 50% Bitcoin, 25% into projects that have real product, have real merchandise, have real growth. And if you can't ask how that chain's going to make money, it needs to fall immediately into the bottom 25%, which is, if these products are starting to run really hard and you're getting like 200, 300, 400% gross, you're taking that money out and taking profit and reallocating it to the products that do have real projected growth, that are Bitcoin, that are protecting your wealth. And I think that's the economy we're moving into. It's going to be much more institutionalized, but because it's much more institutionalized, we cannot forget the mentality of stagflated economies and that investor mentality to kind of keep betting on the open market because they need more money now. They need more money quickly. Because they're going to, what are these institutions going to do? They're going to advertise to us. We have another 6 billion people we can onboard to crypto. It only gets bigger from here. And I think people just need to focus on protecting their wealth and looking at real revenue. Yeah. And what do you think about the Stablecoin Act and everything that's going on in terms of a lot of what my theory was behind what Trump's kind of been doing with his policies in regards to the Stablecoin Act is obviously around World Liberty Financial and his stablecoin USD1. And now we've got a bunch of companies that are suddenly wanting to create their own stablecoins. There's even new governments that want to create their own stablecoins, CBDCs and all of that. And we're kind of seeing a transitory period of this brand new monetary system coming in where essentially you're able to mint more money essentially, just by essentially buying up treasury bonds so they can mint USD1.
and you're kind of creating new money out of thin air. So
Yep.
I'd love to get your perspective on kind of this new monetary system, how things are moving and changing, and like all these new stablecoins that are, coming up and popping up out of nowhere, and how that's going to affect the economy overall. And is this something that could actually help reduce the US debt, or is this going to become a bigger problem in the future?
Yeah, it's a fantastic question. I actually just was in a documentary that's releasing in theaters on December 7th, just about this, with Robert Kiyosaki and
Nice.
a lot of the authors behind The Creature of Jekyll Island. And I think you actually explained it in your answer, was they are printing money out of thin air. Mm-hmm. The difference is the money being printed out of thin air is backed by the United States military. And if you don't agree with the United States military, look at what Trump did to Iran, look at what he's doing on world peace. There's a lot of control there over supply chains. And so this goes back to the original conversation of anybody that, I will die on this hill at this point. If anybody tries to ever argue decentralization to me, I tell them to wake up and get hit by reality.
Yeah,
because
agreed.
the stablecoin is, CBDCs was always smoke and mirrors. Central bank digital currencies were never going to launch in the United States. I actually helped one of my partners on the political strategy side. He was directly behind the language for the anti-CBDC bills in the state of Florida that got picked up and transmitted across multiple states across the United States. Right now in the United States, the reason why we passed that bill wasn't because the United States government can't launch a CBDC. It's because now they have to sue every single state to launch a CBDC, which gives you a massive multi-year lawsuit, potentially billions and billions and billions of dollars going to the Supreme Court, and it prevents it. CBDC was never going to happen. What happened was the lobbying through the Stable Act and the Clarity Act and the Market Structure Bill and stablecoins. That was always the answer. Mm-hmm. Because everybody, I love this conversation. People like, the United States is going to collapse. The US dollar is going to lose its status as the world reserve currency. You need to get into crypto. Every single dollar in crypto is backed by the US dollar.
Yeah.
The the tether is just another fancy word for the Federal Reserve, right?
Mm-hmm.
They're printing it out of thin air. The Federal Reserve is never going to go anywhere. I don't think they're going to ever launch a central bank, but I do think there's going to be a cross partnership of a revolving doors of players between Tether and these stablecoin providers and the United States. And so what's now happening is all of the countries that are hedging themselves against the US dollar with Bitcoin and these assets are indirectly allowing the United States to print even more money to mint more fake dollars, which are US treasuries, again, in your market, and then earn free yield off of it.
Yeah.
So now they're printing money out of thin air, backing it by US dollar, earning a yield on it, which allows them to buy more US treasuries, which then allows them to return buy more billions of dollars of fake money and mint that. And it's this endless cycle of just putting that pressure all right back to the United States.
Yeah.
So 100% I believe the United States can print themselves out of debt. Mm-hmm. The $37 trillion, I don't think when people are fear-mongering that aspect, it's going to collapse. How? If it collapses, the entire world collapses. So you want to be a fear-monger, talk about World War III, nukes, great, go ahead. I don't think that's going to happen. Right?
Yeah.
It's a very, 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 very small fraction of it all,
yeah.
right? The more likely outcome is the entire crypto space becomes more and more reliant on the US dollar. Institutions take more and more control over all of the vectors of the industry that includes semiconductor production, energy costs, everything that is the actual infrastructure to crypto technology. And then every single exchange and major partner that is running A and B books or the market makers are going to rely completely on US legislation.
Yeah.
And if not, jail time, sanctions, or I think in some cases, and potentially this is much deeper discussion on what we just saw with the liquidity, that very well could have been a liquidity play by the United States that just wiped out a bunch of market makers that were foreign.
Yeah.
Did that happen? I don't know. I can't prove that. But I can tell you, and I can prove that all of your legislation in the United States is pivoting the United States dollar to be the United States dollar for the rest of the future, for the next 100 years. There's not going to be a single competitor.
Yeah. This is why in one of my latest videos, I said that this new monetary system is kind of like creating the new version of the Fed, the Federal Reserve. It's like the brand new version of it. It's the biggest thing to happen in the last 100 years. And people really don't understand this. And for me, doing the research, I'm like, oh, this makes total sense. Like, this is a whole new monetary system. This is a whole new way of creating the new version of the dollar.
Yeah.
This is the new version of the dollar.
100%.
Stablecoins is the new version of the dollar. And this is how you guys or Americans or the US actually retain power with the US dollar. Because I was actually concerned about the US dollar maybe like 3 or 4 years ago. I was like, this is...
It's getting sketchy,
This
right?
is getting...
We were told that.
Yeah, this is getting sketchy. And then with this new Stablecoin Act and looking under the hood and realizing what they're actually doing, and the fact that you're buying treasury bonds to then mint these new stable coins, and that's kind of going to reduce the debt. I'm like, oh, okay, this is how they do it. This is their way of getting themselves out of debt. And with the cryptocurrency industry, everything's USDT, everything's USDC, everything's backed and traded through the dollar. No one's trading the euro, no one's trading the pound. It's all US based. Yep. So this is how you guys keep the dominance.
Yeah, I don't know if you actually saw the new CEO of Tether is Bo Hines, who was the head of the Digital Asset Committee for the United States government and passed almost all the legislation. And then the only other competitor is Circle, which is IPO'd in the United States and heavily backing the Trump administration. Yeah. So for anybody that thinks that dollar concept is going to go away, they have literally just embedded and bought up all the infrastructure to be good forever. And there's not a single other competitor out there, which is why I go back to the player economy. It's like, if you understand what we're talking about right now, it's like you're very aware of this. I'm sure your audience is very aware of this as well. We're having a very great discussion on this topic. Keep researching that aspect. Keep researching the aspect of tokenization. It doesn't matter what industry you are. I'm going to give you guys some alpha here. GTA 6, Rockstar Games, Epic Games, they're all going to tokenize their in-game currencies. Disney's going to tokenize their in-game currencies. And so for the first time in the next 2 to 3 years, you're going to see trillions of dollars in unaccessible, illiquid capital. Maybe it's billions of dollars, but it's a multi-trillion-dollar industry where money that you're paying to put into Fortnite V-Bucks, or money you're putting into Call of Duty tokens, or Marvel, or whatever game you're playing, that money for the first time ever, there's a valve that's about to be turned on where it'll be able to be pulled out into the DeFi world in that aspect. And so what I like to tell people is just, this is not something to be scared of, it's something to be aware of. And as long as you're playing in this game and you're participating, there is so much money opportunity to make countless real revenue generating products that are real utility, that have real use case, on-ramps, off-ramps, AI products, SaaS models. There's so much development that's about to happen. That's where the real money is made. That is what everybody should be focusing on building, rather than chasing the next 50x, 100x meme coin or altcoin. So
yeah, on that topic of like DeFi and yields and things like that, like what do you think the difference is going to be in the DeFi space now when it comes to yields on stable coins? Because I'd imagine World Liberty Financial, USD1, like they're going to start coming out with yield-bearing products around their stablecoin. Like, what do you think the difference is going to be on that versus like a traditional bank? Because I know that if I go to my bank, I'm making like 0.2% a year, which is nothing. But I can go to a DeFi product and make 7 to 10% on my stablecoins. So I'd love to get your perspective on how you think the transition between like traditional finance into DeFi is, and how people can make money with yields and things like that.
Yeah, I think banks are dead. I think we've seen over 100,000 banks in the time span of a century consolidate down to 4,000. It's definitely under 4,000 today after the 2008 financial crisis. And so I don't think banks are going to necessarily disappear. Banks are going to be for large institutional players. They're going to be for the 50 plus that aren't ever going to get into DeFi, that don't need to get into DeFi, that don't need to worry about crypto. They just have money, right? They're going to station themselves with banks. But those banks are going to A, tokenize. Yeah. And then B, what's going to happen is I think the Coinbases, the Robinhoods, the PayPals, like they're actually going to become their own banks. And that legislation is being worked on today. And that's why these big banks, the Elizabeth Warrens, the Chuck Schumers, the leaders of the Democratic Party that are so heavily backed by the banking organizations, they've been trying to lobby and complain and say crypto was bad. Like I used to be on this path. I got blocked by CZ for doing this because I made so much content on him being like evil and like he's like committing illegal acts. And then you realize, no, like the big banks actually, what he did was breaking through on an industry, which is why he only had 4 months and still made billions of dollars because they actually had nothing on him. Because everything he was doing is what the big banks were doing. He was just giving more exposure to a global market and it allowed more players to compete. And so the consolidation and the monopolization of these banks started to get scary. The JP Morgans are like, our bank won't be here in 50 years if we don't compete against this. Yeah. And so I think what you're going to see as a normalization and an organic process and flow is big banks realizing the value that comes with DeFi and tokenization because it brings in more retail use case and a lot more volume generation. And then there's the opposite side of that with the exchanges, where they're going to open up those DeFi payment rails and exposures and partner with these banks. Yeah. And so I think you're just going to see more banks. I think banks are become very, very digital and more technical, and it's going to be more accessible. And I think it's just what retail it's what we have to do as Gen Z or Zillennials or millennials. you're not buying a house right now, right? You're not buying, you're not putting your money in gold. You're not putting your money in silver. You're not putting your money in ETFs. It's our optionality is to get somewhat of a good 7-8% margin, hopefully, to outpace inflation on your savings and investments. I think that is going to slowly just holding USDC, holding USDT on Circle or Coinbase is going to generate that.
You're not concerned about restrictions that banks may put on exchanges? Because you're saying that they may be competing. Do you think that they might restrict? Because I know this isn't happening so much in the US, but in the UK and Europe right now, there's a lot of things happening in terms of, for example, in the UK, they want to introduce a digital ID card. If you don't have one, then basically you can't get access to a lot of different things. In Europe as well, there's a restriction on, if you're transferring over 1,000 euros, that then has to be, that information needs to be handed over to the government. Also, Europe has stopped USDT because it doesn't comply with MiCA regulations. I'd love to get your perspective on what you think about, banks or governments trying to restrict access to crypto or exchanges and things like that.
Yeah, so no offense, the UK Prime Minister is an idiot. He is probably one of the dumbest individuals on the planet. I don't know how royalty and election works out there, but the UK is probably one of the most corrupted countries in Europe right now. From a legislative perspective, they call themselves a democracy, but they don't represent the people, and the people will speak. And so it's the same thing in the United States. You can't stop this from happening. With artificial intelligence, we have data centers being shot up into space. There's a space war going on that no one's even talking about that I'd love to talk about. These are all things that are going to be tokenized. And that value is global, not just for one stationary country. This is why the UK lost their world reserve currency. It's why Europe is losing its status as any large economy. All money is flowing outside. If you go to Dubai, Dubai is not even Middle Eastern. It's literally people from Europe. I feel like if you go to Bali is just Australians. If you go to, everybody's leaving these economies, and the United States was starting to get put into that position. The only difference between the United States and Europe is that we have a real democracy. We have true democracy. And so state-based capitalism has allowed certain states to still grow and fight back against that government control. I know in the UK, I've seen people being arrested for literally putting a tweet out. It's, keep doing that. Please, Prime Minister, you're going to cause a revolution. That's not going to end well for anybody. And so I don't even look at the UK as a key player in global finance. I think that the Prime Minister is just, it's not just this Prime Minister, it's the last 10 Prime Ministers that you've had in a time span of 2 years, it feels like. And so not to go down that rabbit hole, but back to the United States, I think the United States has woken up. The Trump administration, whether people like Trump or not, Trump is by far the best possible case for capitalism. Yes, it's hurting us on tweets and stuff like that, but in terms of global peace, everybody needs to be paid attention. Nothing even matters really in finance. The only thing that matters right now is AI. And there's two competitors in the world on AI. That's China and the United States. Everybody else is kind of just going to fall into their place as AI develops. And it's because of these open brain concepts that they're creating are going to completely disrupt financialized institutions. You have to tokenize it. You have to put it on chain. You need cryptography. And so the US has very, very quickly started realizing this. And now you're starting to get that structural shift. And so whether New York falls because we have Zoran, we have just as dumb democratic leaders in the United States as the UK, as Europe, et cetera. AOC, Zoran, the mayor of New York, is literally a straight communist that wants to remove all private real estate, which makes no sense when all of New York is private real estate and the largest private real estate jurisdiction on the planet. But whatever, good luck. We'll see how that goes. And I think it's just going to force a lot of growth in other parts of the country. You have next year, for your audience, I'd highly encourage you guys to watch the Texas Stock Exchange. The Texas Stock Exchange is launching, in my opinion, because some people are saying it was for startups. But the more I meet data center developers and quantum engineers and AI scientists out here, I actually think they're launching the Texas Stock Exchange because what it's going to be for is companies like SpaceX and space biosciences. And so right now in space, you have this huge battle between China and the United States on who's going to control it. And there's literally data centers that are multi-kilometers wide that they're launching into the atmosphere to produce energy at a negative value and run that energy back into AI technology on ground and infrastructure in the States. Yeah. And they're doing this there's Bitcoin miners that are looking to launch Bitcoin miners into the space.
Bitcoin mining in space?
In space. It's the cheapest energy cost. So people don't know this. Quantum energy and AI takes up an incredible amount of fresh water to actually keep it cool. You can't cool the equipment with salt water. So it takes an incredible amount of fresh water not only to produce, it's very, very costly. So if you shoot it into space, there's no atmosphere, there's no gravity, it's cold. You reduce your energy costs by negative margins probably at that point. I don't even know what the real calculation would be. So whoever controls that will have the cheapest form of energy, the highest form of artificial intelligence growth, the highest form of quantum, the highest force of space force, everything as well, in control over financial markets and tokenization jurisdictions. So that's a whole nother deep conversation. But I think people just need to realize, start studying tokenization. Don't fall for the fear mongering that the United States is going to collapse. The only way the US collapse at this point is if we go into some crazy World War III.
Yeah.
And if you're living under, if you want to be a doomsday prepper, do it. I really recommend you just come to Bali, vibe out, sweat a little bit, and you'll feel really good and start studying again. Yeah.
That's why we're here. That's why we're in Bali, to sweat it out and chill and get away from every potential civil war that is.
A lot of people are here because of the Russian-Ukraine war.
Yeah.
So they quite literally escaped the war, and it's an interesting place. It's an interesting, beautiful culture here.
Yeah.
Beautiful culture here.
No, it's really good. So to wrap up here, what would be your 3 pieces of advice to give to a beginner that is just starting their crypto journey, or maybe they've been in crypto for a little while and just need some words of wisdom during this crash situation that we're currently in?
Yeah, it's 3 words. There's so many tips we can give, but I'll start with 1. Number 1 is 50, 25, 25 if you're brand new. And that means 50% spot into Bitcoin, 25% spot into your favorite large caps. We're talking multi-billion top projects, 25% to dabbling into your altcoins. The reason why I say that is the lesson out of this was, if you were on perpetuals on a 2 to 3x, you got liquidated.
Yeah.
Right. And I actually didn't realize myself how many people were doing that. I thought everybody was spot.
There was a lot.
And I had friends calling me like, dude, I'm liquidated. I'm like, what do you mean you're liquidated, bro? Like, spot bet, we're right back to where we were, And so please understand the value of 50, 20, 25 with spot positions. That's investing. If you're going to trade, perpetuals are separate, should never be more than 10% of your portfolio, and that you have to understand is volatile, you stop losses. Yeah. The next tip I would like to give is probably going to be research. This is the next. The next tip is study tokenization, real world assets. If you want to compete at all in the next 2 years, you need to be studying how these markets are going to move. There's going to be a key moment. I don't know if you're 18 and watching this. I don't know if you're 25 and watching this. I don't know if you're 40 years old and watching this with 2 kids and $4,000 in medical bills, medical debt. What I do know is if you start studying this with your skill sets in your industry over the next 2 years, you're going to see a window of opportunity open up for some type of product in the tokenization world. That is your revenue generating product that's going to change your life. Mm-hmm. Number 3 is, I honestly, not to be my own shill, it's going to be follow FOMOed US for the World Esports Trading Competition, and get ready for our paper trading product, because if you want to learn how to trade and be a better trader, you're going to want to download this application to start paper trading and actually teaching yourself and becoming a better trader. And just compete within that. Start ranking up, start educating yourself and trying to be a better trader before you try getting rich quick. You'll be humbled very quickly.
Love it. Josh, thank you so much for coming on the podcast. Really appreciate it.
See you next time.
See you next time.